It's the grand finale of Front Burners for the week. It's the Friday edition. Thank God it's Friday. I'm blessing Eichie. Front Burners is where we handle critical matters that could bring about change in development in any nation of the world. It depends on what country we're talking about at that time. My two co-hosts are here with me, Dr. Idahosa Osamhanze and Oyinpreye Krumale. Good morning, sir.
Good morning, Blessing. Prayer, good morning.
Good morning to you, Blessing.
Great Nigeria out there.
Good
Are you
morning
excited?
to you, Doctor.
It's Friday.
Well, excitement, one can't answer that right now.
Okay, well, you happy it's Friday?
Well, happy, it seems the week is running too fast.
Oh, really?
My weekend is booked.
Okay.
Completely booked.
So you don't have a weekend? You don't have a weekend?
No.
I think the same for me, but not the same. We're glad that we've seen Monday, Tuesday, Wednesday, Thursday, and this is Friday. So we're going to be looking at critical issues today. One that concerns the family, that concerns the child and the society. And another, we're taking a look at U.S.-Africa relations on Policy Discuss. Before we get to the point, let's take a look at some stories that have made the headlines. For the first time in almost 2 years, Naira to dollar rate at official and parallel markets converge. Naira trades at 1,510 Naira to the dollar. The last time this happened was sometime around June 2023. So if we check year to date, the Naira seems to have gained about 155 Naira over the dollar as it began with about 1,600 Naira when the trading began. Should we say that's some progress, having the parallel market and the official rate be same?
Yeah, I think it's a huge success from the point of view of regulation. CBN has been doing everything within its power to make sure that we have some sense of stability in the foreign exchange market. And I think these are the products that in the last 1 or 2 months we are beginning to see that there are some semblance of stability in that market. It also means that all the reforms and the cleaning up that the CBN is doing is producing and yielding some fruits. Probably that's what we are seeing right now.
Ray, what do you think? Should there be a difference when you go to the banking hall to get foreign exchange and then you go to the parallel market? Do you think there should be some, little bit of difference in the rates now that the rates have equaled for the first time in almost 2 years? What's your take?
I think there should be a difference. If the parallel market is now 1,510 Naira and the official market is still 1,510 Naira, that means the official market could have the opportunity to still go down. Okay, what actually necessitates I know Doc will say is the price of demand and supply. Market forces are operating. Does the market forces operate, does it affect the parallel market? Of course it does affect the parallel market, and the parallel market makes humongous profit. They had their own, and because they know that in the official market it's quite difficult to obtain the dollar. So if they are now selling for 1,510 Naira, that means there's a possibility for the official market to sell lower than that, less than that. So why is that not happening? Is this not the same handiwork of the market forces?
Yeah, but what you need to understand in this thing is that you can't walk into any bank today really and say you want to get forex and you will get. It's not as simple because they don't have.
But they should have. The CBN
they should have. That would have been the ideal. You see, it's like we talked about yesterday when we're talking about the Naira as it's moving around in society. So people come into this environment, they don't want to keep the dollar with the bank. You remember some few months back, CBN has actually asked that the bank mop up all FS that were in domiciliary accounts. And what that means is that if you have your money in domiciliary account, CBN wanted to have it so that they can redistribute it. So what do you think people would do? They don't want to put their hard currency inside the forex. So the parallel market are not actually sourcing from CBN because CBN don't even have enough to allocate that can go around the bank. So they go ahead to go source their FX. So what you're likely seeing here is the fact that the little that is coming from the official angle is going around and is now almost being enough for what people are taking. So the pressure that usually pushes the parallel market up is not there. A lot of things have changed because of the pricing. You will also see that a lot of people who are pushing children overseas are also reducing. So people's ability to travel because of air ticket is reducing. All these will push back the demand for dollars. Now, you also see that in the last, how many months now? 3 or 4 months, we have not imported petrol. NNPC said they have not imported any petrol. Dangote has been selling and major marketers have been distributing. So all the money that would have been shipping or looking for to go buy petrol outside is also being saved. So the pressure on that market is not as it used to be. And so you will experience that stability. You see, if it was the other way around, the parallel market taking from CBN directly, because if you look at what CBN is giving to them, it's not enough for them to trade for a day.
And it's not all of them that are getting it.
So it's not enough for them to trade for a day. So they'll say, okay, because of that, of course, the CBN would have given them a margin of profit for running their exchange. But here you're finding that many people are getting this thing from alternative sources other than CBN. But here the market forces is saying, well, if there's glut in
supply,
in demand, and then of course you have plenty of supply, what you find is that price naturally crash. Everybody wants to see how to offload it. In short, I was with a banker yesterday and he said, please, dollar is crashing and it's going to crash further. So people understand what is happening and the sentiment that is in the marketplace.
I think that the parallel market is doing quite well in being able to source forex, because what they're getting from the CBN is not enough, and it's like half of them that gets to receive allocation from the CBN. So
it's still the POS technology.
It is not that. Let's not go there at all. Let's not go there at all. You know that when the CBN streamlined the number of BDCs that could operate, it came to around 2,000 something. Just a bit about 2,000 BDCs are operating, and out of that, about 1,000 are receiving direct allocations from the CBN. I think that if they could sell at 1,510 naira, I still agree with Priya that the official market could do better because they're getting direct allocations from the Central Bank of Nigeria. It may not be enough, but at least the rate there should be less. Even if it's 1,500 naira, let's say there's a 10 naira difference, but it can't be seen as, because where you source from also impacts on how you sell. So if you're getting direct allocation from the CBN, we should see that reduction in the rate as compared to what obtains at the parallel market. So I think the commercial banks still need to do more by dropping the rates a bit. Let's even know how much the CBN sells to them.
That's exactly where I'm
Let's
going.
know how much the CBN sells to them.
To the
because
commercial
that
banks.
the profit of margin that they are having is not so much as to make the rates equal with the parallel market.
So how
because
much
the
is the
parallel
parallel
market
market
guys
making?
still incur some costs.
Yeah, they are making some huge money. But don't also forget that what the CBN government is actually driving at is that the price of Naira is still artificial. And therefore, there's a whole lot to do to make it authentic, to say this is the actual value of Naira. Because of the trading that happens within the market, you cannot actually determine what the exact value of the Naira is. And so that's what CBN is struggling to get, to say, okay, this is the exact value of Naira. This is how much Naira should change for $1. Now, what you are seeing in the market is the fact that people are speculating, and speculations
Just high speculation.
somehow can alter market structures and dynamics. So this is the challenge, and we are getting out of that window now of speculation. When this naturally will settle down, then of course we will be able to determine what the actual value of the Naira is. Because of course, again, you also know that as countries also trying to promote exports, there's a need to deliberately also weaken the Naira. But we have to determine what extent are we going to weaken the Naira so that our export can become attractive in the international market. All these things are economic principles that are at play at the moment.
I think at 1,510 Naira to dollar, the Naira is weakened enough. Nobody should weaken it further.
But let's even look at it currently. How much is the CBN selling dollars to the approved BDCs and even to commercial banks? So if the CBN says, okay, we are selling this for X amount of, and they are selling the same to both markets, and both markets have a convergence of price,
yes,
the CBN can exercise some form of autonomy to bring down the price that it sells to the banks, to the commercial banks. And in that case, the Naira grows more stronger, because if it continues to do that, the parallel market will be forced. It's either they stay there static, or they keep on, succumbing to the pressure of the CBN. And that's not to whittle down the strength of the parallel market, but also to make the Naira to gain strength, even in the market.
So I think
but you see, CBN is also looking to the market force to determine. So what CBN gives to you is you have margins for these people. We determine that your margin will not be more than a certain
threshold.
So that's why if you go to the commercial bank today, what you are going to see is 1510. That's what you are going to see. So, but CBN give them less than, so that they can make their margin, but not crazy margin. Yeah. So it's not what CBN is giving, but the point is actually that BDC, most of them are not sourcing their forex from CBN.
Okay, if this is the case, that means the effort of the government in trying to buoy the production of crude locally will go a long way, will be an addition to this, because like you said earlier on in your analysis, where
I didn't get
that to strengthen the crude production from our recent refineries that are beginning to show some promising, like the Warri refinery, the River State refinery, the Kaduna refinery, and a few other refineries, to be able to generate crude locally for local consumption, so that we could have this instead of, because when we do that, it's going to prevent our local marketers from going abroad to buy, because if they want to go and buy abroad, they will need the forex.
Yeah, but that is the point, that at the moment, we are not really currently importing any petrol. We are not currently importing petrol. So what we should actually be opting for is that we ramp up production locally so that we can actually sell petrol outside, in which case we are earning foreign currency, because it is the currency that we earn from sales that we will have with CBN, and that's what they can trade with. If CBN have excess of it, then of course they can sell to commercial banks, who will in turn redistribute. But CBN don't have. So what CBN, the little that come to CBN, you don't forget that now we are also not shipping on our crude outside. So because of the Naira swap deal with the Dangote refinery and some other modular refinery around here. So that also had robbed us of some FX that is coming in, because Dangote is not paying in dollar, it's paying in Naira. So what would have gotten as FX coming is not coming at the moment. And perchance Dangote itself is also sourcing from the Bureau de Change. And so since now it's buying in Naira, he may not need as much dollar as he would naturally have needed from forex, because CBN can't guarantee anybody a sizable sum of dollar because he can only sell what he has. But what we must put into cognizance in all this is that we need to drive exports. And the more of export we drive as a country, the more FX we earn. And the more FX we earn, the more liquid CBN is. And then, of course, the more access that commercial bank have to FX. And then, of course, people can walk into the bank and said, I can get $1, or you want to do a trade. They can raise LCs for you and the rest of it. But as long as what is coming into the country is still insignificant because of the volume of trade we're doing, because you look at the balance of trade is always in favor of imports. So you will find that we will not always be able to meet up. But the good news is the fact that today we are not as dependent on refined petrol as it were some 12 months, 13 months ago. That's a good news, and I think what this will mean, and this is why I said it's a plus for the CBN, that we are, at the end of the day, gradually getting to determining what the actual value of the Naira is against dollar and other major trading currencies.
Okay, while the CBN is at it, I think that the CBN can also prevail on the commercial banks to reduce their rates. You cannot be getting direct supply from the CBN and sell at the same rate at which those who are sourcing from other areas are selling. So I think that there should be, even if it's just little margin, let's know that this is the official rate, is less by even 3 Naira, 5 Naira than what you get at the parallel market. Meanwhile, the Central Bank of Nigeria's Governor Yemi Cardoso has revealed that the Monetary Policy Committee has voted to hold all key interest rates steady, keeping the monetary policy rate at 27.5% as it monitors inflation and exchange rate dynamics. Oh, that's we didn't really expect to happen. I didn't expect that to happen. I don't know if I didn't expect the CBN to hold rates. I expected that the CBN would have reduced rates given current realities, given how much they've tried to increase rates and inflation has not abated, given the rebasing of the economy, which now puts the inflation rate at 24%. So I was thinking that the rebasing would have been an information tool that will shape the outcome of the just concluded Monetary Policy Committee meeting of the CBN. So I didn't expect that rates would have been held steady. Don't expect it?
I think it was the best thing to do.
Really?
Oh,
Why
yes.
do you think so?
It's the best thing to do. And if you remember yesterday when we were looking at the food price index, one of the issues that actually stood out in that conversation was the fact that we are talking about an inflation rate that was just rebased. And this is just a few days ago, within this week. An MPC meeting is meeting this week. Now, when we are looking at that figure of 24, you remember yesterday we were talking about the genuinity or the authenticity of the figure. How trustworthy is that figure? Is it what is actual in the market? Are there forces that are actually making it look as if that's what it is? Is the season affecting what the food rates are that is actually having a total effect on the head inflation? Now, all this conversation will need some time to crystallize. And so it will be quite a disservice to managing the monetary side of the economy to say either you are reducing or you are increasing. So, status quo ante is maintained. So let's look at this. Probably by the time the MPC is meeting in May, they would have sufficient time to have reflected. So let's look at what the inflation figure will be for February. Let's look at what the inflation figure will be for March and April, then that will help to determine whether we need to move the rate downward or we have to move it upward. And I think the best thing to do is that, like they do in court, when you get to a certain level, and of course, prosecutor and of course the plaintiff are pushing, because okay, let's maintain next party order. Let's everybody remain at where they are. Let's watch the scenario.
Let's status quo remain.
Yeah. So CBN maintaining status quo, I think, is the best thing to have done in this particular scenario, because we're looking at an inflation rate just being rebased, and of course see how does this affect the economy, what data we're going to find in the months to come, and then that will now help to determine whether we are moving up or coming down a little bit.
I have a divergent view. I think that having pushed inflation, rather interest rates from 18.7% to 27.5%, at 6 consecutive meetings, they were increased, and we looked at the outcome. Inflation didn't abate. That was sufficient to prove that increasing monetary policy rates was not equal to reducing inflation. So whether or not the rebasing had been done, and we need to test the effect and wait for some other factors to act on it and see the reality to know what the current inflation rate would be, I think that the CBN should have reduced rates, because by now it should be obvious that increasing rates or leaving rates at 27.5% is more injurious to the economy than reducing.
Okay, I see the increase for the MPR rate by the CBN. I think it became the highest during 2024, the March meeting 2024, because at that particular point in time, the MPR rate was increased by almost, if not 200 basis points. And after then, we'll be experiencing 100, 150, sometimes 50 basis points. And like I was making references some time ago that the United Kingdom, they met and they were really contemplating. The UK MPR met and they were contemplating. In fact, that of Kenya, they brought down theirs by 50 basis points. If I'm not, maybe around 50 basis points. So I was really looking forward to, I wasn't saying we are going to maybe come down the ladder. I knew that is either we remain here or we are just going to move upward, just a marginal number around 50 basis points. So what does this say for the Nigerian market and for the business persons? Will this open up business persons and investors to approach the normal banks to be able to access loans without restrictions, or is it going to be the season where these business persons will have the opportunity to be able to recoup more than what they have gotten from the bank to be able to pay back their loans? So if we look at it, 24.48% is that of inflation. But if you look at the other part of the equation,
the interest rate.
The interest rate is about 27.5%. So the 27.5% for inflation, for interest rate is greater than the inflation rate. So I was beginning to think how this is going to affect the market and how investors are going to respond to this figure.
You see, when you look at it's just common sense. Is you are looking at it. If you remember in the November meeting, one of the issues that was raised was the fact that they decided to raise the MPR because the previous one, and by the data that's available to CBN, is having effect. So that was what they said. I don't have access to what the CBN or MPC members do have, because all the data are in their hand and they can sit down and look at which one actually pays better. And that's what I'm saying. I'm saying that when you look at what we have today, naturally one would have been thinking because we're still talking about yesterday over 5 trillion naira of circulation. That was the whole idea of what we're talking yesterday. And what CBN is determined to do is to say, how do we move in all this currency for oversight? So this is the challenge that is before CBN. And one of the tools that was being used to actually see if we can get this thing in here was to discourage excess of cash getting into the hands of people. And my argument has always been that I don't feel that our problem is actually demand push inflation. I feel that our inflation was cost push. And because it's cost push, people don't really have the money, but they have to struggle to be able to buy the basic necessity for life. So it's not as if that people are having excess money in their hand that was responsible. But the truth is that there is so much of money that is outside of the reach of CBN. So they can't see it on the dashboard to say that this money are within our commercial bank. But they know the quantum of Naira that is in circulation. And they can also determine the quantum of the Naira that is within the reach of CBN. So how do we move this money all in is what CBN had to contend with on a daily basis. So on this particular MPC meeting, and I feel is really to look at it, let's even see that the 24.46% inflation is not artificial. So how are we going to know that? Because this rate just came out on Monday or Tuesday, I guess. And so if you, MBS released that data on Tuesday or Monday or Tuesday, and they're saying, oh, what is the base inflation now? Is 24%. So I think we need some time to study that inflation window to see, is it going to go up, is it going to go further down? Now, if inflation is going down, then of course we can now begin to determine what to do with the rate of borrowing. Because don't also forget that the risk associated with borrowing is also, inflation is also part and parcel of that risk. Apart from the fact that people are not able to pay, inflation will wipe out whatever you lend. And therefore, the bank, to be able to recover and recoup depositors' money, then they must have a high yield interest on it.
Okay, I get what the points that you raised, Doc, which is that let's assume the inflation rates, which came as a result of the rebasing, is artificial or not a true reflection of what the inflation rate is. It is safer to leave NPR at that, so that you are not reducing, whereas the inflation rate is higher, the actual inflation rate is higher than the NPR. On the other hand, there's also a possibility that the inflation rate is a reflection of what it is, and then interest rate is higher than the inflation rate, which would probably mean, if that is the case, more gains for the bank and less for the business, because they are paying more than they should have if the situation was a true reflection of, if the interest rate was a true reflection of what we are having. But I think that because we are having cost push inflation, it would have also helped to maybe tinker with it just a bit, to help the cost at the end of the day, since the inflation is fueled mainly by costs.
If we are experiencing cost push inflation, the right logically and normal sense would demand that the MPAC meeting would have, reduced the interest rate in order for them to open the market up for investors to come borrow and invest more, so that it can strengthen the buying capacity of the public.
Yeah, but you see, this is the economics around it. The economics around this is, you can't be very sure of what it is. I usually use Ply Basker's assertion. If you believe that there is heaven, good. If you believe that there's no heaven, good. But if it is safer for you to walk toward heaven than to walk against it. Because if eventually it turns out that there is heaven,
you have made it.
You have lost nothing. You have gained everything. But if it turns out that there's heaven and there's a hell, and you didn't walk toward it, then you have lost everything. So somehow, it is safer to stay in the middle. So you watch as I said yesterday, every policy of government or policy at that matter can be for even individual, has gestation period. You don't expect to make a policy today and then you start to see the results tomorrow. It takes some time for some of these things to crystallize. And this time, which is the biggest judge, is what eventually will determine. That's why I said CBN has their data, which we don't have. At best, I can speculate here to say our inflation is cost push. But they also have
a counter-argument based on their data.
Because of the data that they have in their hands. Because, you see, just like the lady who was on the show on Valentine's Day and said, oh, they're even having excess of demand.
For food.
For food. So that was surprising to me.
So CBN could even use that data to say it's demand push.
Oh yeah, so you don't know what data they are using. And so that's why we have to be very cautious in looking at the wholesale. But when you look at the sentiments in the market generally and see how people are struggling day to day to be able to live out their life, even those who are working, you realize that the problem is more with cost than with demand.
If we're talking about time being the judge of this, don't you think that maybe having an MPC meeting, another one by May, is kind of too far? This is February, so we have March, maybe somewhere around April.
Meeting is statutory.
It is about 4 or 5 of it in a year.
Is 4
they had more than 4 last year. They had more than 4 last year.
You can have emergency because a whole lot of.
So let's have some emergency.
Yeah, but I think it's seeing that everybody seems to be agreed.
I'm not agreeing.
No, not you. You don't need to agree. Everybody seems to be agreed that government reforms have started to yield benefits.
I think I won't be in a haste to
just
go with that.
No, because those who are playing within the sector, they can tell you, all the sectors can see that the policies and the reform are beginning to yield results.
But we cannot say that conclusively, because the gestation period for some,
I understand. There are some few things.
It's not the same for all the sectors. So for some, we're still looking.
What we are looking at is a lot of things that we're talking about here. We just talk about power market,
yes,
and official market
being at par,
being at the same level without any force or fuse from anybody. There's no recent policy measure that we say CBN would have taken that have made that happen yesterday. So what you're seeing happening is the market settling down. And apart from that, when you look at every other sector, you see people are beginning to stabilize in terms of oil and supply. We're seeing that trend happening right now. Prices is moving and you are seeing it move up, move down, move up, move down, and we're seeing some sense of stability at that point. In short, I remember when the reform came, people who said, oh, we are going to buy petrol at 2,000 Naira per liter. But we have not got it to that point yet. So what that means is that there is some stability that is happening within the system. And as long as this stability is in the system, there are some positive things that we can say is happening. And so it is better to be cautious. I'm not too optimistic. But we know to say that as a people are now starting to adjust to doing things right. That is, for me, fundamental. We cannot consistently, and I have argued this, we cannot continue to subsidize everything subsidizable, and especially when there are no mechanisms for actually doing this, and expect that we are going to be better off for it. So what I expect is that as government is working, as they are tweaking their policies and they are seeing the effect, then we see over a period of time we'll be able to get to a level of stability. So to that extent, we can say, well, let's keep the status quo until we see anything contrary to what's on the ground to determine whether rates are moving or rates should.
Well, we have the month of February to check what the inflation rate would be. Well, that may not be anything to go by because the rebasing was done towards the end of February, so it may not really reflect. But let's also see what the inflation rate would be at the end of March. Perhaps that will give us a clear picture to know if the rebasing is a true reflection of what the inflation rate is, or there is need for the CBN to make adjustments with the MPR. So that will determine if there's need to call for an emergency monetary policy committee meeting of the CBN.